Hi traders, and welcome to the daily recap show for today, which is Thursday the 24th of February. Now obviously we had the Russian invasion of Ukraine overnight, which was dominating the markets this morning, which meant the markets opened up quite substantially down. We were approaching key support at 72.25 to 72.37 on the FTSE, and then we said if we broke below there we could see moves towards 71.61 to 71.73. If we held it as support, we had resistance today at 73.56 to 66, and then 74.20 to 30. So let's go and see what happened in the FTSE today. Okay, so as you can see with the FTSE, we had tested this key support in the pre-market session here, and we had held it as support. We even held it on the retest here, right on the cash market open, and then we got this really strong push up. We did get a continuation pattern of sorts here, which didn't really trigger for the momentum, so there wasn't really an entry signal there. And as you can see, we didn't quite get up to that 56 to 65, 66 area of resistance. So not a great deal of opportunity in the FTSE today. With volatility in the markets, does create a lot more opportunity. Now sometimes you do have to still exercise extreme patience. There's with the greater volatility, there will be opportunities in the market, but you do have to still exercise that patience to wait for the right opportunities at the right time. That can also generally mean moving to higher time frames to look for opportunities, because on the lower time frames with the greater volatility can create a lot more, can get you chopped in and out of positions a lot quicker and a lot easier. So sometimes it's better to move up a time frame to look for your execution in the markets. Now, even with the FTSE today, there wasn't too much of an opportunity on the 15-minute chart or the hourly chart to get in on anything. As you can see, there was this sort of reversal pattern here, which had taken that liquidity out. That is a really nice signal. However, it was pre-market, so it wasn't something I was looking at the time. But if that had been on the market open, that certainly would have been something that you could have looked at. So other than that, though, there wasn't really a great deal of opportunity on the FTSE. So let's go and take a look at the DAX. So with the DAX, we also mentioned about the Russian-Ukraine stuff, and we said we had current support at 13.865 to 8.90, and where we could see moves if we saw breaks below there. We said, however, if we saw an inventory correction, which is a retracement back towards the previous day's lows, which can often happen when we have really big moves overnight and really big gaps between where the market close or the previous day's low or high and where the market is opening, we can often see some of that price action retrace. So we said that there was a potential for the inventory correction, and we had resistance at 14.110 to 130, as well as 14.185 to 210, and then 14.305 to 320. So let's go and have a look and see what happened with the DAX. Okay, so with the DAX, you can see that, again, pre-market, we had held below this support zone at 865 to 890, which I had spoken about. But just before the market opened, we got the strong impulsive push above, and then we actually moved down on the open, and we just held above it just after the cash open, and then we got this really strong move up into those two resistance zones that I mentioned on the report, the 110 to 130, and then the 185 to 210 zone. So you can see that the once that held and had the false break, that actually did move up into the resistance as we expected. We then did those resistance zones did hold, and we then pulled back. I'm not something I would have necessarily got involved once we had seen this push up. I would have wanted the market to break down, but there were a few opportunities here. There's a continuation there and there once you started breaking back below those zones. So if you were wanting to get short from reactions from this zone, those were your two opportunities really to do so. However, as I mentioned with the FTSE, when you get this sort of volatility, sometimes it's best just to move up a time frame for your execution. So if we go and have a look at that, you can sort of see this this action here. Not too much on the 15-minute time frame at all to get involved in. However, we did take a trade on the hourly time frame, and here you can quite clearly see a reversal pattern whereby we've grabbed that liquidity that we always talk about below that support zone. This was in the pre-market session, and as soon as the market opened, we come down, we retested, and then we can take a break up of that bar. And this is a trade that we actually took for our expert alert service, whereby we had our stop just below this support zone, the key support zone, and we targeted up towards this, just a front run of this zone for this resistance zone for a 1-to-1 risk to reward. So that shows the importance of sometimes looking for the higher time frame, especially when you have this volatility in the market, because the market's down 5%. There's the opportunity for that inventory correction that we discussed about. So once you know that, you know you're from a key support zone, you can take advantage of those opportunities. So there will be a lot more volatility in the market in the coming days, what with the Russian-Ukraine stuff going on, and that should and could produce some opportunities for us. So we'll keep assessing the markets and see what happens. So I hope you found this useful, and I'll speak to you again soon. Cheers.